UNH has been on a wild ride lately. The stock just broke out of a significant consolidation range, but management's talking about a prolonged, challenging period. Is the bottom in for UNH? Let's dive deep. All right, so the word on the street, and from UNH management itself, is that we're looking at a prolonged, challenging period requiring fundamental reorientation. This isn't exactly a glowing endorsement, right? It points to ongoing concerns about medical cost trends and regulatory pressures impacting the broader healthcare sector. Investors are weighing this cautious tone and a consensus negative EPS growth outlook for the next 5 years against the company's sheer size and diversification. It's a real mixed bag of signals out there. First off, let's get acquainted with UnitedHealth Group. These guys are a diversified healthcare behemoth in the U.S., operating through four main segments: United Healthcare, which handles all those health benefit plans; Optum Health, providing care delivery and health management; Optum Insight, focusing on software and consulting; and Optum Rx, their pharmacy care services arm. Basically, they touch almost every part of the healthcare system. Now, despite this massive footprint and diversification, even their own management is signaling caution, talking about a prolonged, challenging period ahead, which suggests they're buckling down for some internal reorientation. Now for the juicy stuff, the scenario analysis. This is where we figure out if the bottom is truly in. We have this interesting situation where management is cautious, but the stock itself has shown some real strength recently. How do we reconcile that? Well, the market, with its wisdom, seems to be looking past the immediate challenges, or at least anticipating that UNH's reform efforts will pay off. Let's break down our three scenarios. First, our base case, which we're giving a 50% probability, reflects this balance. Management acknowledges a prolonged, challenging period and fundamental reorientation, which aligns with broader sector concerns. But here's the kicker. The technical analysis shows UNH has broken out above a multi-week consolidation range of $328 to $250 and held above $328. This bullish technical signal suggests the market expects these challenges to be managed effectively, leading to earnings stabilization, not a significant decline. So, we start with the current TTM EPS of $23.09. Assume earnings stabilize around that for fiscal year 2026 as they work through issues, and apply a PE multiple of 15x, slightly above current, reflecting market confidence in their strong franchise despite challenges. That gives us a fair value of $346.35. Next up is our bull case, which I'm assigning a 35% probability. Why so high despite the cautious guidance? Because that strong bullish technical breakout above 328 with stated upside resistance targets at 377 and 458 is a powerful signal. In this optimistic scenario, management's reorientation efforts succeed rapidly, leading to highly efficient cost management and stronger than anticipated growth, especially in the Optum segments. This would make the consensus negative EPS growth overly pessimistic. Here, we start with $23.09 TTM EPS, assume a modest 5% EPS growth for FY26, projected EPS of $24.24, and apply an expanded PE multiple of 16x, reflecting renewed growth and reduced risk. This yields a fair value of $387.84. Finally, the bear case, which I'm giving a lower 15% probability. While the prolonged challenging period and potential for fundamental reorientation to fail are real risks, the stock just broke above a critical level. For this scenario to play out, the price would need to fall back below that 328 breakout level, negating the recent bullish signal entirely. In this case, the challenges persist, medical costs rise, and regulatory pressures bite hard, making the negative EPS growth forecast accurate. We start with $23.09 TTM EPS, project a 9.04% decline for FY26, EPS of $20.99, and apply a compressed PE multiple of 12x due to increased risk and pessimism. That brings us to a fair value of $251.88. All right, let's pull up the chart.
Here's what our technicals team is seeing. UNH has recently broken out of a multi-week consolidation range, specifically from about $328 down to $250. This is a big deal in the world of charting. If the price can remain above that 328 level, the next upside resistance targets are looking at $377 and potentially even $458. That's some serious room to run if this momentum holds. So, is the bottom in for UNH? Weighing all our scenarios, with a 50% chance for our base case and 35% for the bull case, our weighted fair value comes out to approximately $346.70. The technical breakout is a huge factor here, showing the market's conviction despite management's cautious tone. While challenges remain, the current technical setup and the high probability we're assigning to stabilization or upside suggests that, yes, the bottom does appear to be in for UNH, at least for now. The market seems to be betting on management's ability to navigate these waters. Given our weighted fair value of around $346.70, and with potential upside to $387.84 in a bull scenario, you might look for entry points around or slightly below that $346.70 mark. For a more conservative entry, that 328 level, which acted as a critical breakout point, could serve as a strong support to watch for should we see a retest. All right, if you found this breakdown helpful, smash that like button, subscribe if you haven't already, and hit that notification bell so you don't miss our next deep dive. Let me know in the comments, what do you think about UNH? Is the bottom truly in? This content is for informational and educational purposes only and is not financial advice. All investments involve risk, and you should consult with a qualified financial professional before making any investment decisions. Always do your own research.